Hi guys, it's your boy Trader Tinashe, and today we are going to be talking about a lot of things. The first thing we're going to talk about is market analysis. From the 4-hour time frame, as we move to a smaller time frame to get perfect entries using the top-down analysis theory, and then we're also going to do the practical on that, how to enter trades using that analysis. Then we're going to dive deeper into that analysis. We're going to look at the types of trends, how to spot an uptrend, how to spot a downtrend, how to take trades accordingly. And after we do that, we're going to move on to prop firms. We're going to talk about prop firms, how you can buy a $10,000 account with just $80 and then trade it and withdraw thousands, just like other traders are doing. We're also going to talk about risk management, and finally, we're going to talk about wealth building using the same strategy. The strategy we're using on Crash 300 today is the strategy that I'm going to teach you to analyze the markets and build your own wealth. So without further wasting of time, let's get into it. So this is Crash 300. Like always, we start by looking at the trend we are in. Okay, we did the analysis on this if you check the videos I posted, but we're just going to start off again. I'm going to first tell you and explain how to spot a downtrend or an uptrend. Since downtrends and uptrends are the things that we are looking for, we are the first things we are looking for in a market before we can tell if it is a buy trade or a sell trade. So an uptrend is when the market is moving up, creating higher highs and higher lows. So as it goes up, it creates a higher high and creates lower, it's creating higher highs and higher lows as it goes up. And us, we want to cash these trades here, or here, so that we can maximize profit as the market goes up. We can also cash these trades by entering what we call continuous patterns, which we may find throughout the uptrend. Can be here, can be here, can be there. So continuous patterns are those patterns like Tillers and flags, where the market creates accumulative movements and we just have to spot them if it's the perfect time to enter them and cash them whilst they are in a certain, whilst they make certain patterns so that you can maximize the profits from that. So like we said, this is an uptrend, it's going up, we want to catch the market at its bottoms, or we want to catch the markets in the middle there when it makes accumulative movements. Okay, so here when we are looking at trends and we want to use the equidistant channel, the trend line should touch the bottom, the first two bottoms, this bottom and this bottom. So this bottom doesn't count. So as long as our trend line touches the first and the second, the third bottom will be automatically made by the trend line. So with that, we have our downs, and then we just place it at a high. We can place it here, we can place it there. So we just make sure that we place it at the highest high. So if it happens to be here, our top trend line will go all the way there, and then it means that what we have to do is enter a trade here and exit when it reaches the top. So that's how you spot an uptrend. So it's the same theory when looking for downtrends, right? So when we're looking for downtrends, we will just use the same theory and invert it. So if we are going to go up, this time we are going to go down. So let me draw again. It's creating lower lows and lower highs as it moves up, as it moves down. So this is a lower high, this is a lower low. This is a lower high, this is a lower low as it goes down. So we want to catch the market, like always, we place our trend line touching the first two highs we want, we have that and that. And the market automatically comes and then respects this. That's when we enter. Always remember, it's the third touch that we want. This is the third touch that we want. And then we sell, and we expect the market to touch our bottom. So we just want this movement from top to bottom, right? Then we have what we call a ranging market. So in a ranging market, the market doesn't have anywhere to go, right? So what you're going to do in a ranging market is to It's called a correction or a ranging market. The market is stuck, it doesn't have an uptrend or a downtrend. It's just making these funny movements. So what you do again is you find the lowest points, you take them, you place your trend line, do it for the same highs, you take it, place your trend lines. Then we have a clear view of how the market will move. It might take time moving down, go up, but people can catch a trade from here to here. It might also take time reaching, and then it usually has a lot of fake outs. So there's always a fake out at the top or at the bottom of your trend line. So don't worry about that. If you're going to trade in a range, just know that there will be more fake outs than usual. Okay, let's get back to analyzing the markets. Let me just try to refresh this. I thought it would delete, but anyways, we can just do this. Okay, now we have a clean chart. This is the 24-hour time frame or the day time frame for Crash 300. The first thing we do is move on to a smaller time frame. On this particular chart, I'm going to start with the 1 hour time frame. Okay. So this is the 1 hour time frame. What you're going to do is look for a trend. Right? Let me zoom out. We are looking for a trend. So we can tell that the market was creating a downward trend. So you can see from the top, it was creating these lows as it was going down, and then this funny movement is creating right now. So if the market breaks this pattern, it means that it has broken out, and this will mean a retest, means the market is now going up. So based on that, we now have a clue of what the market might do, but always we have to use our analysis. So we take our equidistant parallel channel, okay, just zoom out a bit. Okay, this is Crash 300. We touch our first high and our second high. You can see this is our first high, this is our second high. Then we let it go all the way to the end there. Then we touch the lowest point, which happens to be this, the first lowest point before we touch the first line, before we touch the first high, which happens to be this. So automatically we can tell that the market moved down, right? Moved from this point, respected our low, moved and created a lower low and continued to go down, respected our channel, and then came up, went back to the test, and then came up again, found a harder retest, made a triple bottom there, and then broke, made a breakout candle, came and retested the candle. This confirms that the market now has to buy to touch our trend line, right? So if it touches our trend line, it means that would be our next take profit. So based on this alone, we already know how the market is going to move, and based on this alone, we can now make a trade and find our next take profit and our stop loss zone. So let me just do a bit more of explaining on this, okay? So like I said, this is a downtrend, right? The market is going down and it's creating higher highs and higher lows as it goes down. So we want it to create another lower high as it goes down, so that we know if we're going to enter another sell and carry it down, or if it's going to break out here and then move out of our channel. Right? So just like that, we know that the market has to reach this point. Like usual, the next thing we do is take our zones. Okay, we use what we call rectangles to mark all our zones, our support zone. So currently we are in a huge area of resistance, which is there, which has been retested too many times, and then we're waiting for the market to go up, break this point and continue going up. Then at the same time, we want to mark another take profit zone, which is this liquidity right here. So it means that the market has to touch this point as well. So this will be our main take profit. Then we can also mark this. That is if we have a breakout, but the chances are slim that we want to exit at this point. So we just mark these 3 points. So based on that, we now move on. Okay, we zoom in a bit, and then if we wanted to get a perfect entry here, we'll choose the trend line. We'll touch this high, we'll touch the second high here, and the third. So after we touch the second high, it should automatically indicate the third high for us. As you can see, it was broken here. And then the market went. Remember, always remember this, guys. A trend line is never respected 4 times. So if a trend line is respected, if a trend line is on the 4th touch, just know that that's automatically a breakout. And the thing is, when the market comes to test the trend line for the 3rd time, it moves fast. So just make sure that every single time a trend line should be broken on the 4th touch. A 4th touch is never respected. Sometimes it might break on the 3rd touch, but a 4th touch is never respected. And there's no 5 touches. A trend line doesn't touch 5 times. That's a lie. So based on this, we now know that the market broke out, came to retest, and is now going up. So this is where we would place our entry, our long position. So my long position would have been here, right at the retest. Then my stop loss would be right under the previous low, which would be here. So it would be under it just a bit. Then my take profit will be right there. So as you can see, we have a 2.88 risk to reward ratio, meaning for every $100 you're gonna risk, you're gonna make around 290 bucks, which is just fee, which is not bad. So this is where we'll take the trade, this is where you would exit. So guys, don't worry how the market will move. It might come down, it might go up, but that's just how the market moves, guys. So always remember, the first thing you do when you touch your phone is to remove all the indicators. You can see that when I did my analysis, I've never used a single indicator. So you should remove all the indicators. That will just confuse you and make it very slow for you to understand the market. So the earlier you remove those indicators, the earlier you become profitable. Okay, so this was our entry. So the market came, obviously, to test this zone, maybe come down a bit, and continue going up. So don't worry if it takes time, guys, it will reach our take profit. Just make sure that your equity can hold till this point right here, because it might come and retest. The market has its own way of moving, so it might come back and retest and continue going up, but that's just how the market moves. So you can see that we did all this on the 1 hour time frame. We didn't use any indicators, we didn't force trades, we're just gonna wait for it. So waiting, guys, can be a problem in trading. You can see candles. If we are on the 1 hour time frame, we're waiting every hour for a candle to close. So to reach here, it might even take 4 hours. But that's what trading is. Trading is patience. Trading is skill and patience. So if I'm to put it in a percentage, I would say skill is 70% and patience would be 20%. The small 10% is money. Money doesn't really matter when it comes to trading. We can always get money to trade. But the important thing is to have the knowledge and the skill. So after this, I'm going to talk to you about how you can make money with no funds at all, and make a good amount of money using propfirms accounts. So just as we finish this and close this chapter, I just want to make sure that everything here is well said. We talked about the retest. So if this helped you, please just leave a comment. Make sure you like, make sure you subscribe. Just say something in the comment section so that I'll know that I've got people engaged who are really interested in knowing what I have to offer, the knowledge and skill that I have to offer. Okay, so just like that, we are done analyzing the market. We talked about the downtrend, how we enter a downtrend, how we find movements inside Okay, so our first entry on this particular trade, let me show you what happened. Okay, when the market reached this point right here, we entered a trade which was somewhere. Let me see if I can get that correct again. Okay, exactly. Our trade was when the market came and then played around this point and then retested our trend line, yeah. And then broke our trend line, yeah. And then our TP would have been the same zone, but up a bit, okay. Then my stop loss on this trade was just below the first high, just below the second low, sorry, which would have been right here. So if you were to take the trade, you would have went in profit and then laughed it out, and then came in massive losses, but it wouldn't have hit stop loss. So if you risked $100, you'd have seen maybe 70 loss, 80 loss right here. And then if you are holding for the previous 2 days or 3 days, right now you'll be looking at something like 300 profit, maybe 250 profit, continuing to our TP, and which right now I'll be telling you guys to add entries since we've broken another strong support. Okay, so the other thing people are asking me is about stop loss. So always remember this, guys, stop loss isn't a number, stop loss is a zone. So if there's, okay, let me explain this further. So if I say the stop loss zone is right below our first low, it means that our stop loss is from the low, let me delete that input operator. Okay, it means that right below our low, a small distance, then below that is our stop loss zone, meaning this is our stop loss zone. So it means that I'm going to pay attention and wait for the market to start acting funny in this zone. That's when I exit. It's either the market creates long bearish candles in this zone, or the market breaks this zone, or the market just creates the movements that you can tell that this is a stop loss, this stop loss is it. So you can just put your stop loss right below here, but if you trust the strategy, you can just wait for it to break this channel, wait for it to break this strong zone. So the market is always about zones, not certain figures. So in crash and boom, or pain and gain, the market respects a stop loss, but when respecting that same stop loss, it moves down the stop loss and puts the stop loss where the spike ends. So if you are going to trade your account with $50 and then you put your stop loss on 40, don't be surprised if the market breaks your stop loss and then moves the account to 0. It's possible because the spike might keep on going. And the other thing about crash and boom, guys, I'll tell you something. To be profitable trading crash and boom, trust me, you need good equity. $100, $50, $300 is more like gambling. But if you know what you do, you obviously make money. But if you really want to make money with these things, just make sure that you deposit something like $1,000, so that if it hits your stop loss, if you put a stop loss of $100, and if it goes to 130, you won't complain that, oh, my stop loss is hit. You know that's how the market moves. Because even if you are in a buy, it was going to work in your favor. So it's not just deriv taking money from you or to taking money from you. It also means that it works in your favor. If you are buying boom right after the TP, if the spike moves after the TP, it means you also make money on the TP. Just like trading news, just like trading NFP. Every time there's a spike on the market, the stop loss or the TP is moved up or moved down, so that you make more money or you lose more money. That's trading, and you should get used to it. Okay, so we are now moving on propfirms. So propfirms, I use what we call E8 markets. This is a propfirm I've been using, and it's a very good propfirm. I've been using it for some time, and I can tell you that you won't go wrong when you're using this propfirm. Okay, so if you just go onto your broker and search E8 markets and then use this code, this is the discount code that will get you a 5% discount. You can just screenshot it and then put this referral key. If you also want that 5% discount, just make sure you screenshot it so that you can use it whenever you open the markets, okay? So that's the discount code, that's the referral key. So just like that, guys, you can get your 5% discount. And the other thing about propfirms are cheap. What happens in propfirms is that if you have a working strategy, that's working for you perfectly, and you've made good money, maybe you've deposited, you started with 20, 30 bucks on deriv and paying and gain, and you've made something like $100. If you want to build wealth, if you want to make good money, remove that $100 from the deriv broker, from the synthetic broker, and go to E8 markets and then buy what you call a funded account. So a funded account is when a prop firm gives you money to trade for them. First, they will ask you to do what they call an evaluation stage, which you just have to prove that your strategy works. So they may just tell you to reach 8% or 10% of the account. After reaching 8% or 10% of the account, they will give you real money to trade, which will be under their account and their certain rules. And then at the end of the day, you make a withdrawal of 8, 70, 80 or 90% of the profits. Sometimes even as high as 95%, depending on your account size and how much you bought it for. So on this particular market, E8 markets, if you go to new accounts, yeah, I will explain to you how everything works. Okay, so this is where you start. It asks you to choose your market. Obviously, you're going to say forex. Then it asks you which steps you want. So there's the E8 one step, which is good and is popular. You just have to pass one stage. Then there's the E8 two step. Then there's the 3 step. Then the E8 1:1 3 step. Then there's the E8 trap. So this one is free. You can just head down there and then just get the free and then just try it. You don't need money for this. You'll be testing your strategy. If you find out that you can pass these stages without any problems, then you can go ahead and buy the 1 step or the 2 step. I would encourage buying the 1 step, which is popular. So the next thing you do is choose your platform. I'm sure everyone uses MetaTrader platform. This is the this is the broker you have to use. So any broker you use is also on MetaTrader 5. So you can use platform 5, trade log or CTrader. I use CTrader. So the next thing is now selecting the balance. So as you can see, as you're going down, the prices change. You can see the CTrader is a bit expensive. It's $98 because it has tiny space. Then there's the match trade, then there's the trade locker, then there's the platform 5. So let's just work with the match trade. Then you choose the balance. So you can see that a $10,000 account is $88. So a $5,000 account is just $48. $48 only. A $100,000 account is just $488. And the thing is, let's say you are budgeting, you have just made $100 in deriv, and you want to quickly make $10,000. The next move you do is buy this 10K account. Okay, you move down. Okay, then you select your drawdown. So your drawdown, it means the amount of money it allows you to lose while holding a trade. So if it gets to 6% of the total account, so the account is 10,000, and then you put 6% drawdown, it means you can't, if the account gets to 600 running loss, it automatically closes. So it's up to you. So the more you push up, if you want a 40% drawdown, which is 1,400%, the amount just increases to $158. So you can just use the standard or even go down and use the 4%. You're not risking for anyone. This is a big account, and even if you make the smallest amount of money, you're still good. Then there's the profit share, 90%. You can choose 90%. You can choose 100%. You get 100% of all the profits, but the price will increase. So I will just stick to 90%. Then there's the swap free account, but it increases the money. You can see it's now $88 for a swap-free account. It increases 10%. So I wouldn't encourage using the swap-free account when trading propfirms, because it allows you to leverage more and put more trades as the market runs in your favor. I would encourage you to just leave it like that. You agree all the terms. You put the discount code that I gave, which is Tinashe. I'll just put it on the screen again. Okay, it's no longer there, but it's Tinashe 5% something. You just put it here, and then you validate it and place the order. Then just like that, we've come. So let me explain what the phase 1 means. So if you're using the trailing drawdown of 4%, it means you're only risking the maximum running loss per day is $400. Then the daily loss is $300. So you just make sure that your account doesn't get to minus 400 if you place a trade. And you just have to make sure that you don't close with above $300 or $300 or above in loss. And your profit target, all you have to do is make $600. So imagine on a $10,000 account, all you have to do is make $600. That's just perfect. I don't know why you wouldn't do that. Okay, weekend holding, you're allowed to hold on weekends, you're allowed to trade NFP, you're allowed to use EA expert advisors, robots, you're allowed to use them. Okay, so that's just how the market works. Okay, so let me explain now how you build your wealth using this strategy. So I would put a 6% drawdown, profit share there, okay, maybe 8% just to, okay, let's use 6%, since we said we're using $100. So the account now we're buying is $100. We just have to make $900, which is 9% of the account, and our daily loss shouldn't exceed $400, okay. So the strategy I would use here, working with the information given here, is that we're not supposed to exceed $400. So it means that per day I'm going to enter 2 trades each and every day, and the maximum loss I would put is $150 per trade, right? So for day 1, the first trade, maybe I entered gold, I have risked $150 as my stop loss. So if I lose $150, it means I still have another $250 to lose, but I'm going to enter 2 trades the same day. So if I have a 70% or a 75% win rate, or even a 60% win rate, it means that every time I'm going to risk $150, I'm working with the ratios that we are doing here. We have a 2.88 winning ratio. Okay, if we have a 2.88 winning ratio, it means that on the first trade, I'm going to make $432, risking $150. Then if it goes bad in the second trade, I lose, then I'll take the same trade. So it's 432 this first trade, right? And then I lose $150 on the second trade, which is stop loss. It means I'm in 282 profit. Then the second day, I risk $150 again, then make 432 again. Then even if I lose the next trade, it doesn't matter. You can see, working with a 50% win ratio, we've made 564. Then if you win the next 2 trades, if you risk 150 again on the next trade with the same ratio, which will get you around $400 profit, you've already reached the TP. So after you reach the TP, you've reached $900. They'll close your account. They'll ask you if you hadn't verified to verify your account, and then they'll send you the real account with the same details given here, and you just use the same strategy again to make profits. So just like that, you have started to build your wealth. So what I would suggest when trading propfirms is after every maybe 1,000 or 2,000, if you are trading a $5,000 account, just make sure that after you make every $1,000, 10% to 20% of the account, just make sure to withdraw your money and compound it. Make sure you keep it aside. You don't keep it in the propfirm. If you make $1,000 today, withdraw it, keep it in your bank or keep it in your crypto wallet. The next thing again, you compound, you buy a $10,000 account, because it doesn't matter if you have a big equity, the rules remain the same. Even if you bought a $5,000 account with the same rules and the account is now at 8,000, if you just make $400 loss, sorry, on the 5,000 account, if you make $200 loss, even if the account is at 8,000, it just means that you have lost, and then they'll just block the account and then you move on. So they're tricky, they can be tricky. So what I would suggest is, as you move, you keep withdrawing those $500, $10,000, then buy another better account as you go up, until maybe one day you get to the part where you buy a $500,000 account for 2,000. If you're making money on the smaller accounts, it's just the same. Yeah. And within just a month, guys, from that same $20 you deposited and caught a few trades on Crash 500, you will make that money thousands, maybe 10,000 or so, and then people will start saying forex is a scam, we gambled. But that's just how the market works. So this platform also shows you the leaderboards, people that are paying out, people that make good payouts. You can see that it's made 15,000 payouts during the past I don't know what date it is, maybe it's lifetime. They made around 15,000 payouts, and someone withdrew 1.2 million. Sorry, total payouts last month was 1.2 million, and there are different types of people here. So guys, one of these loss could be just you guys. You could just withdraw 2,500 from a $5,000 account. So yeah, guys, it's something that you should look at, and don't miss out. Just make sure that you make money. We want to see more of the traders from my channel doing withdrawals and on this biggest payout pages. You can see we have Americans and German people here, but we don't have Africans, guys. We don't have Africans. We want to make sure that our African title gets its own space on the leaderboard. Okay, guys, so that's all. If this video helped you, obviously it helped you, make sure you like, make sure you comment, make sure you subscribe, make sure you share this video to a person who needs it. And thank you again for watching. I will expect your comments and the country you're commenting from, so that I'll know that we are all on board. Have a good day.